Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking equity futures, let's talk S&P. Actually, we can talk all three indices really, but let's focus on the S&P. As the S&P and the Dow, the sell-off continued in those two, as well as the NASDAQ, but really got hit below 4% on the S&P, 4.1% on the close. Same thing with the Dow, just over 4.1%, S&P down 3.6%. The sell-offs continued, and now stocks are actually negative on the year. Stocks rallied in the morning, and then turned, and they actually went positive in the morning session, and then turned lower and just continued to pile on until, again, we got negative on the year for both the Dow and the S&P. Now, the S&P 500 was really affected as well by the VIX. The VIX actually jumped to its highest level in 16 months. Now, there's been a lot of institutional and retail selling of the VIX to generate income. It's option selling. Those sellers had to cover today. You had to see a lot of that. We'll see that in the next CFTC report in terms of volatility trades, but the VIX was actually up 90% on the day. That's the biggest jump I've seen since the crisis, going all the way from 15 to 30. It's starting at a lower level, so that 90% is a little misleading, but the mean reversion of the VIX is going to be a lot more dramatic as the mean goes higher, because you're going to have higher volatility in the VIX itself. So the volatility of volatility is actually increasing. Again, highest level we've seen in the VIX since in 16 months. The level itself is not so high, but the change on the day was huge. Now, all of this huge selling took place in the face of a pretty good earnings scorecard. Earnings so far as of Friday, with 50% of the S&P reporting, show 75% of companies beating on EPS, 80% of companies beating on revenue, and a 13% blended earnings growth rate. So it's not necessarily an overall earnings decline pushing this. It's definitely some negative feelings between the executive branch and Congress with the Devin Nunes memo and the upcoming budget negotiations to again keep the government open. Fear of inflation that we saw in the jobs number, which seems to me to be a little overblown, and again, fear of higher interest rates. Now, lastly, interest rates actually fell in the 10-year note sector because we got a bit of a flight to quality and people buying 10-year notes in toward the end of the day. This is Bob Iaccino talking S&P 500 futures on a down 4% day. Again, S&P is now negative on the year. Coming to you from the CME Group trading floor in Chicago.